Do you want to make money trading US30? Of course. Who doesn't, right? Do you know how I know? Because I do too. So in today's video, I'm going to show you how I trade the US30 indice. Let's go. What's going on, everyone? Welcome back to the channel. Welcome back. Now, as you saw in the intro, we're going to be talking about how I personally now trade the US30 indice. Now, we all know how the banks likes to trade, right? They like psychological numbers, they like straight numbers, they like round numbers. They don't like to mess around, right? They don't like 36.5, 36. No, they like 3600, 3500, 3550, right? Now, in this strategy, and the reason why I like it is because if I take my horizontal line right here, right, and place it at 36500, right, you can just double click and adjust the number coordinates to make it exactly 500, 36500. Now look to the left. Look what happened here. Market stopped right there. And then if you, obviously this is, it's always going up, but like you see how whenever it reaches a new psychological number, a straight round number and a new high, it most likely gonna reverse, right? It can't just go straight up, you know, the market have to move in market structure and all that stuff together. So if you just take your horizontal lines, right, this is what I do. We see we have a line at 36500. Now we can put a horizontal line at 36,000, right? And we can put another horizontal line at 35,000 right there, and you can just adjust the number to 35,000. You can put a number. You know what? Move this. Hold on. Let me show you something. So all the round numbers, 34,000. Put a 0 there. And then we have one, just for this video's sake, 3,000. We'll put one right there as well, 1,000. Now look to the left, and this is, mind you, this is the daily time frame. Look what happened here. Market touched it, came back, retraced, made a higher low, made a higher high, came back, higher low, higher high, and where does it go? To the round numbers, right? It doesn't just stop nowhere in the middle of nowhere. It stops at a round number and a psychological number. So this is why I like psychological numbers when it comes to the indices, well, especially US30, to be honest, is because banks don't like to trade the market just anywhere and everywhere, right? They like round numbers. Now we can also put a 3600. Nah, we'll leave it at there. So go down to the smaller time frame, and you can see how 35, 36, 36. Yeah, we can put a 36. 36 is right there. That's another round number, 36,000. Boom, and you can see how the market gets there, breaks through, rejects, and then drops to 3,500, and then breaks, retest, drops through to 3,400, 4,000. So this is what I do. Now let's go back in time. Let's say the market is now going up, and this is my strategy. I take my trend line, put a trend line across, right? Put a trend line across. Now the market is moving up, of course, in an uptrend, and it makes higher highs and higher lows. Now I'm watching. Now obviously you can't just you can buy at, like, you could have bought right here. That could have been a great buy if you took a buy right here and then targeted this round number and then stops were just below right there. That would have been a perfect trade. Now let's say the market is now here and just made a new high, right? The market have just made a new high. Now watch it and watch what it does. It goes up, comes back. It tries to go up again. It fails to make a new high, so it makes a lower high. And that's where I'm actually watching the charts. As soon as it makes a new lower high, I watch, is it gonna break this trend line, or is this trend line gonna hold support? Now this, look what happened. Market breaks through, the market breaks through, it comes back and retests, right? Buyers tries to push it up again and they fail. And what do they make? A new lower high. From seeing that, I dropped down to the 15 minutes time frame, right? That's where I find my my entries usually. Let's see if we can find that right there. I dropped down to the 15 minutes. Right, now we know the market has failed to make new highs, and we've just hit a round number and an all-time high. Right, now as soon as I have all these confluences, now we have confluence 1 that it just reached a new high. Confluence 2, it's a round number, 36500, right? Confluence number 3, it failed to make a new high. It breaks structure right here. If you watch my market structure video, I explain exactly market structure and everything. So if you see here, market breaks structure right there, tries come up to make, it fails to make a new high, it breaks market structure. Now the trend has shifted. Now we're making lower highs and lower lows. Now we're in a bearish market, right? Now I wouldn't, like, you can take a sell there, more of an aggressive approach, but I am more of a safer trader where I like to wait for a break of this trend line that I had drawn on and a retest. Now you could have entered right here, right, off this retest and a bearish engulfing. Your first sell position could have been right here after this close, right, and stops just above the previous high, which is these, because you have to have you have to put your stops somewhere that makes sense, right? Because the market can come up to a previous high and test it and still be in market structure and continue its way down. So personally, for a safer trade, because if you look to the right, look what happened here. Market came up and took this high, but it's a minor structure, so it's not major. So if you put your stop loss under or above a major structure point, it takes a lot for the market to break that. Like, that means that the trend is over, it's going up now. So putting your stop loss right there is very, very safe. Now here's what you could have done here. One is targeted a 1-to-1, right? It's honestly up to you. I personally don't take trades 1-to-1s. They just don't make sense to me, honestly. Number 2, option 2, you could have targeted this round number, which is how I trade. I usually trade it from one level to the other. So I would have targeted 36,000 and entered. Now here, if you want to talk about scaling in, this could have been another opportunity for you to scale in another position, right? You could have took a short position. The market tries to come up and it retests the trend line again, and it fails to make new highs. So after this close, after all these wicks tells you something. You have to know your candlestick analysis. If you want me to make a new video about candlestick analysis and how to read each and every candle and what each and every candle tells, because each and every candle tells a story. You have to know, like, what is this telling me? Why did this form like this, and why did it not form like this, and why is this a bearish engulfing, and all these things. If you wanna see that, do let me know down below in the comment section. Now I would have entered another position right there with my stops, this time below this high, right? Below this high. I wouldn't put it above all the way there. I will just put it above, because now the market has tried again for the second time to make new highs, but it failed. And then after that bearish engulfing and after all these wicks, I would have put my stops right there and then targeted, of course, my round number. And then we have absolutely 2 beautiful trades. The first one is a 2.8 risk reward, and the first one was a 1 to 0.7 to risk reward. So Honestly, I don't know what you want more than that, but this is absolutely crazy, guys. It's not rocket science. This is very, very easy understanding market structure. Now, bear with me. Always, always, always remember this, right? Just because the price has reached a round number doesn't mean you must now jump in for a buy or a sell. You must watch market structure. Market structure is king. It's everything. So the market could basically do something like this, right? Let me draw this out for you guys. Market can obviously, if the market is trending up, makes higher highs and higher lows and higher highs and higher lows. Now forget about, now let's say these are my round numbers, right? These one here, right? And let's say a round number falls somewhere random, let's say right here, right? Somewhere here. Just because it reached there doesn't mean now you must take a buy into the next round number, which would be up here, right? Let's say these are my round numbers, right? In whatever market you're trading, and let's say the price has reached there. If you understand market structure, after a new high, the market must come down now, well, and form a higher low. So you can't just jump into a buy right there. You have to wait for the market to come down, make a what? A higher low. And then come up again, come down, higher low. And when the higher low falls above or under a round number, that is my entry. That is my strongest confluence. And then from there, after obviously a candlestick confirmation, either bullish engulfing, bullish variation, all these things, then I jump into a buy and target my next round number, of course. So you have to be careful market structure, and don't just take a random trade just because it hit a round number. No, you must watch market structure, and when a higher low point or a higher high point falls under or above a psychological level, that's when you enter for a buy or a sell. Depends on what you're trading. Let me delete all of that. I hope that made sense. I hope you guys enjoyed today's video. I hope you gained a lot of knowledge. This is how I personally trade the market. Look right here. Look where the market stops. Round number 36,100, 36,200, almost. Like, obviously the market is never like exact to the pip. It can get to that area, right? So what you can do as well is draw a box. You can draw a box around it and say, when it comes to that area, that's a psychological number, that's a level, that's a key level. And look what happened here. Market wicks, comes back, breaks through, failed, fake out, comes down. See? Anyway, I hope you guys enjoyed today's video. If you'd like to see more indices or US30 strategies, please do let me know. I know a lot of people enjoyed my previous one. This one was a naked, completely no indicators whatsoever, purely price action and key levels. Absolutely no indicators, nothing. I didn't use nothing. And as you can see, very clean, very smooth. Market, look what happens in the market. It goes from 36,000 to 35,000, then it touches 4,000, and then from there it reverses up, and where does it go to? 35, breaks through it back to 36,000. See, it doesn't just stop nowhere. It doesn't just stop in a random location. Anyway, if you guys enjoyed today's video, please do let me know. Smash that like button, subscribe below, and I'll see you in the next one. Peace.